Right, today we want to look at audit sampling. We want to look at audit sampling. Right, you would find that normally, in fact, practically, it is almost impossible for you to carry out a full audit on everything. Remember that the auditor has a responsibility according to auditing standards to make sure that he gathers sufficient and appropriate audit evidence before arriving at their conclusion. Now, for you to be able to be sure of what you have done, that means you have to audit everything. That means if they come with the financial statements, if you audit everything that you are given, all the transactions from January to December, if the year ends in December, then you can be almost sure that whatever you have done is okay. Even if you audit everything, remember that an audit can never give absolute assurance, simply because whatever you are auditing, some of the things were prepared by the auditee, and they had an influence on how they were prepared. Right. So practically, you'd find that it is not possible to do that. As an auditor, you are coming in maybe at year end or during the year, during the interim audit, and you don't have as much time as those who prepared the financial statements. For the financial statements to come out, transactions happen on a daily basis. For example, if you are auditing SPA, can you be able to audit all sales that happened from the beginning of the year up to the end of the year? That would be impractical. So because of that, you would find that auditors, they normally audit a sample of the transactions. So there are various reasons why we have to audit a sample. Number one, we talk about time. You are auditing transactions that happened throughout the whole year, but you need to submit the audit report maybe within 2 months or 3 months. Or sometimes you have an auditee who wants the report for a special purpose and they want it to be produced within a month, but you are auditing transactions that happened throughout the whole year. So because of time, it may not be possible to audit everything. Number two, also cost. Most of the auditors will be paid according to the hours that they spend on the audit. So now, if the more the hours, the more the charge. It might not be cost efficient for the auditee to have you audit everything. Right. So because of some of those reasons, you would find that normally auditors, they don't audit everything. They just take a sample, and from that sample, they can be able to arrive at conclusion. Right. So we have got ISA 530 is the one that gives us guidance on sampling if we have to use sampling. Right. When you are testing transactions and auditing, according to paragraph ISA 500, when they talk about audit evidence, paragraph 63, there are three main methods that you can use to select the transactions that you can test. Either you can select all items, what we call 100% examination, of which we said that in most instances, it might be impractical. Of course, in some instances, it can be practical. For example, you are auditing a company and you are auditing motor vehicles, and they only have 10 motor vehicles. It can be possible for you as an auditor to audit all the 10 vehicles. Let's say they are located, all of them in Gauteng. You can be able to see them and audit the state and everything. So you can do 100% audit. But in most situations, let's say you are auditing sales, it might not be practical to audit tens of thousands of transactions and do 100% examination. Right. Then you can also select specific items. That means there are items that you categorize, and or maybe there are specific characters that you might be looking for, and then you just audit those specific items. Right. And then we can talk about sampling. And this sampling can be statistical or non-statistical. When we're talking about statistical sampling, you'll be using methods that are related to statistics in determining your sample. Right. So that's a audit. So audit sampling is one of the methods that we can be able to use. Right. So you should go to ISA 530 for a detailed explanation of the things that I will be discussing here under the audit sampling. But the most of the important things I will be able to discuss with you here. Right. There are important definitions that we have to understand, which will affect our understanding of sampling. Right. We have to understand what is audit sampling. Right. You are sampling as long as you are not auditing all the items. As long as your audit is based on less than 100% of the items, then there is audit sampling. And for there to be audit sampling, all units in the population should have a chance of being selected. So all units in this population should have a chance of being selected. Then when we talk about the population, we mean the entire set of data. Let's say you are auditing sales. The population will be all the sales invoices for the year, or maybe all the receipts for cash sales for the year will be the population. So the population depends with the area that you are auditing. If you're auditing buildings, we can say all the buildings owned by the company will be the population. Then the sample is the buildings that you are going to audit. Right. Then we've got what we call sampling risk. Right. A sampling risk, this is the risk that the conclusions that will be arrived at, depending on the sample used, may not apply to the population. There's a risk that whatever conclusion that you shall make based on the sample that you have audited may not be correct with regards to the population as a whole. For example, let's say you take 50 transactions out of 1,000, and on all those transactions, everything went well. But there are 3 transactions that had fraudulent activities. Unfortunately, they were not part of your sample. So you are going to conclude that everything was done according to procedure, simply because you didn't look at these other 3 transactions. So that is the sampling risk. So the risk that you might arrive at a conclusion based on your sample, which might not apply to the population as a whole. This sampling risk usually comes in 2 types, right? The first type, you can conclude that either the controls are working well or the transactions have been recorded properly when they have not. So that will lead to a wrong audit opinion, because your sample is showing you that everything was recorded properly. But in actual fact, if you had audited 100%, you're going to note many things that are material that were not done accurately. That is one angle of sampling risk, whereby the conclusions that you are getting on the sample do not apply to the population. Right. Then also the other angle that the risk comes from is whereby you can conclude that the things are wrong. Maybe let's say you take a sample of 10 transactions, then out of those you find 7 were erroneous. Maybe you took maybe the transactions for March as your sample. Then during that March, you find that there were errors on 80% of the transactions. Now, when you extrapolate to the whole population, you can conclude that, okay, these accounts were not done properly. But maybe during that month of March, the main accountant was on leave, and there was a junior we had to take over, and this junior was not good in the work. And actually, after March, when the senior accountant came back from leave, the senior accountant came and corrected those mistakes. So because of your biased sample, which does not look at the broader picture, you might find that you might conclude that things are not well. And what is the implication? You're going to increase your audit procedures, your sample sizes, you then carry on audit on more transactions. That way, you are going to have a less efficient audit. So we're saying with sampling risk, you can either conclude that everything is okay when it's not okay, or you conclude that everything is not okay when it's actually okay because of the nature of the sample that you have used. So sampling risk is basically the risk that the conclusions that you are going to get based on the sample that you have chosen might not apply to the population as a whole. Right. Then tolerable misstatements. As an auditor, you have to set the level to which you can say this misstatement can be acceptable and might not negatively affect my opinion. Remember that when you are auditing, it's not about you should never find a mistake. Remember, these things are done by humans. There will be mistakes, but we've got that element of misstatement. I think a material misstatement, which we talked about in our previous sessions. So as an auditor, you have to check, you have to have what you call your tolerable misstatement. So that is the misstatement that maybe you can set an amount that 50,000. The misstatement, as long as in aggregate they do not exceed 50,000, then it's okay. Right. Then tolerable rate of deviation. This is the extent of the deviation from the procedures that are set. So for us to have a assurance, there is a standard that we can set. So the rate of deviation, this is the extent to which the actual is actually differing from what we expect. Right. So those are the definitions. Any questions? There are some more definitions in the standard, but those are some of the definitions that we have to talk about. Any questions so far? Right. A sample size. Sample size is affected by many things, which will affect the sample size. A lot of factors will affect how big or how small your sample size is going to be. For example, if you see that the team of accountants is not qualified, you are likely to increase the sample size because you know that the risk of material misstatement is very high. But if you see that the integrity of management and their qualifications and experience is so good, and they have got integrity, they do their work accordingly, they've got the right work ethic, then you can be able to have faith in their work, and then you can reduce sample size because you trust their work. Right. For you to determine your sample size, you can either use statistics formulas, which are deemed to be more reliable, or you can use your professional judgment. Remember that as an auditor, you are required to be skeptical, to have a questioning mind, and throughout the audit, most of the things they depend on your professional judgment. So under the circumstances, you will be able to see. I think I'm going to look at the factors that have to be considered when we're talking about sample size. I'm going to come back to it. Sample size very soon. You will see the various factors that as an auditor you look at, and from your judgment, then you can be able to conclude whether to have a big sample size or to have a reduced sample size. Right. Now, when you sampling, you have got steps that you have to follow as an auditor when you're assembling. The first step, you have to determine the objectives that you for carrying out whatever you are doing at that moment in time, right? For example, when you are auditing, let's say the payroll, let's say for example you are auditing the payroll, so your objectives, you can say all payments were for work actually performed. Let's say, and you can say the employees paid are bona fide employees of the company. So you should have the objectives. What is it that you are trying to audit? Right. Now, the second step, you have to determine what are the procedures that you have to perform for you to ensure that all the pay that was paid was for work that was done. Right, you can select a symbol of payments for wages on the pay sheets and trace them to job sheets which are signed and inspect that the hours paid agree to the hours worked. Then you can select of employees and verify that they have valid employment contracts. Contracts with the entity. Right. So these are some we're going to do that at a later stage when we do the substantive procedures. So maybe that's what we want to do. You want to verify that the payments of the salaries were for work performed. So you have to check, okay, you take a sample of payments for wages maybe on the pay sheet, then you trace them, you look at, okay, this one, Mr. Samuel was paid 50,000. Then you go to the worksheets and see, okay, how many hours did he work? He worked so many hours. Then you check according to the employment contract, how much is he paid per hour? He's paid so much. So was it valid? Like they signed, the supervisor signed the sheets, and the person has got a valid employment contract. You checked their IDs that are in the in their employment file, and maybe you even go to their workstation and check if they exist. if Mr. Samuel is actually employed in Department B. So those are the procedures that you are performing now. Right. After determining your procedures, you confirm that the population is appropriate and complete. Right. The population should be able to address the objectives and to be able to make you fulfill the procedures that you intend to do. For example, if you are trying to do you are trying to check if the wages were accurate, there is no need for us to go maybe and check if all employees are on the pay sheet. Is that right? Like you should know that when I'm testing completeness, what do I need? When I'm testing accuracy, what do I need? When I'm testing the disclosure, what do I need? So make sure that the population that you are talking about is the right population to address the objective that you are trying to test. Right. So we're saying select the population that addresses the objectives and ensures that the procedure is successful. Right. In our example, we can say there should be all pay sheets. We can have all job cards, all employment contracts. Please, guys, the examples that I'm giving, I'm just giving them in line with my example that I'm following up on my example that I started on number 1. So make sure that, okay, I need to test if the employees worked. So I need the job cards. So I should have all the job cards for all the employees before I even select the sample. Because one of the attributes of sampling is that all the items that are in the population should have the same chance of being selected. Is that right? Then you define the units of the population. Normally, an entity is encouraged to keep what we call pre-numbered documents. So we should be able to have these pre-numbered documents that are relevant to our assertion that you are trying to audit. For example, job cards 36 to 150. Let's say the job cards are pre-numbered, then they started on number 36 during the current period, and the last one was number 150. So we should know that we are dealing with job card 36 to 150. Pay sheet week 1 to pay sheet week 4. If you are dealing with sales, you can say from receipt number 1000 to receipt number 1700. That means from the first one of the period to the last one of the period. So that is the population that you need, so that you can be able to see clearly your population there. Right. Then that's where I said that I'll come back here. The issue is you now have to determine your sample size. Right. The sample size can be determined using statistical formulas. We don't go deep into these statistical formulas. and they can also be determined through professional judgment. We assume that your knowledge is reasonable enough to be able to judge. And the judgments includes right. We have one, what we call the confidence level. Right. You have to determine what is the confidence that you expect your sample to give to you. That means the level of satisfaction that you can say this sample is representative of the population. The higher the confidence level, the more the sample the greater the sample you have to create. If you want, let's say 99% confidence, then you have to increase the size of your sample. If you are not worried about the confidence level that much, if it's 80%, then you can reduce the size of your sample. So the higher the confidence level you want to get. When we say confidence level, that means the confidence that you will have, or the level of satisfaction that you can say these the sample can actually represent what is on the population. Right. Your tolerable misstatement. Right. That is the maximum error that you can accept. Right. So if your tolerable error and deviation is very, very low, then you have to increase your sample size. But if your tolerable misstatement is a little bit high, then you can be able to reduce the sample size. Right, expected misstatements. Right, the larger the expected misstatements, the larger the sample size that you have to make. Right, then also the population size. Normally, you can the larger the population, that can also mean you might need to have a larger sample. So these are judgments that you have to, as a professional, you have to see under the circumstances, what are the how you can be able to structure your sample size. Right, but our standard ISA 30, it also gives us guidelines on the factors that have to be considered when you are determining the sample size. Right. These factors are divided into the factors affecting the test of control and also the test of detail. Right. I'll also send you this document. Don't worry, I will send you after the class, and also this one. These are factors affecting sample size according to IS 530. So they are in the standard. These are according to the standard, and I'm also going to send you you can get them in the standard, but I also extracted them so that you can have a document that specifically talks about these factors. Right, there are these factors that we'll first talk about. So this is according to the standard straight. These are for test of controls. Test of controls are the ones that we're doing over the past weeks, whereby you were saying, remember that before you go further, remember on your audit plan and your audit strategy, you can consider what we call a combined approach, whereby you test controls and also you test the details. Test controls, that means to see if the controls that are in place are working. Things like segregation of duty, authorization, and stuff like that. The controls that are there to ensure that our system produces the good results. Right. So the following factors have to be considered. Right. Any increase in the extent to which the auditor's risk assessment takes into account plans to test the operating of effectiveness of controls. Right, the more the assurance you need, the more the sample size. If you are mainly interested in whether or not the controls are working effectively, if it's a strong area of concern for you, that will mean that when you are testing controls, you have to increase the sample size. But when your assessment of risk, you find that it's the controls are not likely to be not working, then you can reduce the sample size. So this one is the result of your risk assessment. We did that. That means if according to the risk assessment, we have seen that the controls can be tampered with, and there is highly likelihood that the controls are not working, then you have to increase your sample size when you're doing the test of controls. Remember those things that we're saying that, let's say for employees, observe them entering the premises to see if they are using the biometric system. That means you have to do it on maybe 20 days. Throughout the audit, every day you should come if you think that the controls are an issue. Right. Increase in tolerable rates will also, when you increase the tolerable rate of deviation, that means your sample size will decrease. The opposite is true. If you decrease your tolerable rate, then your sample size has to go up. So we're saying the lower the tolerable rate of deviation, the larger the sample. So if your tolerable rate, for example, is around 1% or less, that means you have to increase the sample to ensure that your tolerable rate is achieved. So the higher the tolerable rate, the lower the sample. There is an indirect relationship. Right, then expected rate of deviation. If you increase the expected rate of deviation, then you have to increase the sample size. Right, so these are the factors that actually we talked about that. Then the what? Confidence level, desired level of assurance. The more the level of assurance, the more the sample size. All right. Then increase in number of sampling units does not affect your sample size. Is that right? So we're saying the larger the number of sampling units does not affect the sample size according to our standard. Right. So these are the factors that we have to take into account when determining the sample size for when we're auditing the test of controls. Then when we're auditing the test of detail, when we're saying test of detail, for example, when we want to audit the sales figure that is correct, the vehicles that they exist, we're not on the controls now. We're on the details. We're trying to audit the balance in the financial statements from various aspects, be it existence, be it rights and obligations, be it accuracy evaluation. Right. If your risk of material misstatement is high, you audit an area. Maybe let's say you discovered that over the past period, there's been sales that are misappropriated from cash sales. So you've identified the cash sales as a high priority area, there's increased risk, then you have to increase the sample size. And for example, if there is whilst you read in the paper that the company there were issues of ghost employees. So when you audit the salaries, you should increase your sample size to check if the employees are bona fide employees. So the higher the risk of material misstatement, the higher the more the sample size that you have to use. But if the risk of material statement is viewed to be lower, is judged to be lower, then you can also reduce the sample size. So there's a direct relationship between the risk of material statement and the sample size. Right. Then increase in the use of other substantive procedures that directed at the same assertion. Right. There are many ways in which you can audit one thing. For example, if you want to check if the employees on the pay sheet exist, you can go to the department on a random basis and check if the employees are working. You can go in the files and check their employment contracts and their IDs. You can even interview the supervisors to see if those employees they exist. You can go and check the worksheets to see if those the logging ins at the point where they work, to see if those employees are logging in and out on a daily basis. So as long as you've got many procedures that are directed at one assertion, then you can reduce your sample size because you've got many things that are testing the same thing. But if you've got one way of testing a particular assertion, let's say we have decided that to see if the employees exist, you are only going to use the employment contracts, then you should increase your sample size to reduce the risk, the audit risk. So if you are using many procedures, then you can reduce the sample size. Right. Level of assurance, I think that one is also what I talked about, the confidence level. As long as you need increased confidence in your results that you are going to get from the sample and conclude that they can be related to what is on the population, then you can be able to, you should increase your size. Tolerable misstatement, I think I talked about it, that there's an indirect relationship. The higher the tolerable misstatement, the lower the sample size. Expected misstatement, we said there's a direct relationship. The higher the expected misstatement, the higher the sample size. Right. Stratification of the population. If we have stratified the population into many smaller parts, then we can decrease the sample size, because these many smaller parts will now bring a huge sample. Right. That means when we say stratifying, we have grouped data. So in each group, we're taking some data. Let's say we have, instead of looking at the cells, we have men's clothing cells, women's clothing cells, babies' clothing cells. So we'll then reduce the samples in those so that they can, together, when put together, they will make up a big sample. So the more the stratified the data, the lower the sample size. Then we talked about the sampling units. We said it's negligent. Right. So those are the factors. I'm also going to send you that document, but you can also get it in your standard to the appendix to ISA 30. IAS 30. So I'll be able to send you when I send the recording. Right. Any questions there? So you should know these factors. I think even you can see in your study guide, they specifically mentioned that you can be tested on these factors. Right. So that is the sample size that I said that I will come back to it. So these factors will then, you then use your professional judgment in deciding that, okay, when I'm auditing my sales, how many invoices should I audit? If I'm testing the existence of motor vehicles, how many vehicles should I check the papers and stuff like that? How many computers should I go and check the serial number? You can't go in a government department and audit all the computers. You can only do that to some of the computers. Right. Now, after determining the sample size, then we have to select the sample size. Right. This can be done in different ways. Right. You can do a random sample. Right. When we talk about a random sample, every item has a chance of being sampled, chance of selection. For example, you can just open the file with invoices. You look at an invoice, then just go down. You don't even count the number of invoices that you jump. You go to the next invoice. Lift up another page, go to the next invoice, on and on without following a specific numbers. So that is random sampling, right? Then you can also use what we call systematic sampling. Right, with a systematic sampling, you select a starting point. And select every nth item. For example, you can start from let's say we are selling, you are auditing the sales invoices. You can start from invoice number 30. Then you can audit every 10th invoice after number 30. So that means number 30, 40, 50, 60, 70, 80, 90. Or you can start at 1. Then you say you audit every 50th. That means 151, 101, on and on like that. That's systematic sampling. Then haphazard. Right. So this is somehow linked to what? To random sampling. Right. So you don't necessarily follow specified numbers. So you can just jump here and there. Maybe you can choose a starting point. So it's sort of a combination. You can choose a starting point, let's say the 12th year. Then after that, you just take randomly. Right. Then we've got block sample. Select a group of continuous items. For example, invoice 50 to 75. Instead of jumping, you just choose from 50 to 75. You just say, no, I will go and audit. I want to audit the motor vehicles of the company, but I've selected the Tshwane branch. I will only audit the Tshwane branch. Then we have got monetary unit sampling. Right. This is determined based on monetary value. Right. So instead of choosing the invoice, we can choose the amount. For example, we can say every 1,000 rand sale should be audited. So we start from 0. The invoice that makes the sales 1,000 will be the one that we'll take. Then the one that makes the sales 2,000 will be the one that we'll take, on and on like that. So your symbol will be based on the amount, monetary value. So these are the different ways in which we can be able to determine our symbols. Any questions? Right, after selecting our symbol, then you perform the audit procedures. The audit procedures that we have determined here, these procedures. You now have your symbol of payments, symbol of worksheets. Then you have selected your symbol. Then you'll be able to perform the audit procedures that are related to that symbol. So that means the designed audit procedures on step 2 will now be carried out on the determined symbol. For example, the wages and employees will be audited based on the selected employees on the pay sheet. We'll have determined our symbol. Let's say on our pay sheet, then we say we start from the first employee, maybe they are in alphabetical order. Then we then take maybe every 17th employee. So we now have our symbol. We write our symbol that we've got Mr. Moyo, Mr. Dube, Mr. Nyoni, on and on like that. Then after having those people, then we go now and carry out those procedures on number 2. That is, we go and verify each employee. They should come. We should go to their workplace, see them, that they are there. Get go to human resources, get their employment contracts. We want the employment contracts of these people. Check, okay, they are paid at what rate, and how many hours did they work on the pay sheet. So all your procedures that will have laid out. Because remember, when you do your audit plan, you also have your procedures that you are going to follow. So those procedures that we have determined will now be carried on the symbol. You won't be able to do everything on them. As I said before, that this work was done by some people for the whole year. So you cannot just come and do it over 2 months. Remember that an audit is done over a limited period of time. So you now carry out your audit procedures on the symbol that will have you will have chosen. Right. Now, after performing the audit procedures, you have to analyze the nature and cause of deviations and misstatements. Right. You see, maybe let's say, for example, you can check, you can see that, oh, these employees, they are there. I find them. I saw Mr. Due is there, and I went to the factory, is there. I saw Mr. Kutz is there. Everyone is there. So I don't think that they are ghost employees in this company. But there's a trend that I saw that the rate that they are being paid is more than what is in their employment contracts. You found that maybe 60% of the employees, where they are supposed to be paid 100 an hour, you could see that they were being paid 120. And you found that in lots of transactions. Right. So the auditor will examine causes of deviations to verify if they are just isolated errors or continued practices. That can even cause huge deviations. If the population is considered. Right. So you check, you see a deviation. It's not all deviations that as an auditor you have to raise an alarm. You might find that after all, this was just an error, a genuine error. You only found one error, so that you can say, no, this is just an error, so it's not an issue. But you can see that, there's a practice here that is happening there of inflating the hours. Or maybe you found out of the sample that you audited, there were 15% of ghost employees. You went to their workstations, you didn't find them. So that means the problem is more serious than whatever you thought. So you might need to carry out more procedures. Or maybe you might find that, no, this was just an isolated error. So there's no need for me to do a lot of procedures, considering that it's just a minor error that happened there, which is likely to be unrepeated. But again, you'll be using your professional judgment to be able to see whether it warrants further audit procedures, complementary procedures, or you can be satisfied with the work as it is. Right. Then, after that, you have then you project the sample result over the population. As I was saying, that if you see that this is an isolated incident, then you know that I know this is likely to be not to be a problem very much. But if you see that there are a lot of ghost employees, then you can be able to project over the whole population. For example, you can use the proportionality method. Let's say if you audited, your sample was 10% of the whole population, and you found a misstatement of 100,000 rand, then you know that if you had audited the whole population, then the misstatement was going to be 100 rand times 10 to make it 100%, which would be 1 million. Or you can use statistical formulas. Right. So the auditor can use statistical formulas or may project the deviations on the population. to determine the overall deviation that might exist on the population. Right, then you can see that if I saw such a deviation on my sample, how about if I had done the whole population? Then you can see, okay, it was likely to be this. So then there's a cause for concern because this is too much, or maybe it's just tolerable. Then it's not much of a problem. Right. Then evaluate. Right. Compare your what? The projected deviations to the tolerable misstatement. Remember that you as an auditor, you have got your tolerable misstatement. And this is the misstatement that we can say it's reasonable. Then as long as the projected misstatement is above the tolerable misstatement, there's a cause for concern. Right. So they might be need to request management to investigate deviations beyond tolerable levels. The auditor can also alter the planned procedures in response to results obtained. If you are happy with the results that you have obtained from the sample, then you can carry on and do other audits. But if the results that you are obtaining from the sample you are not happy with them, you might even ask management to carry out an investigation, or you can even change your audit plan. So you can even change your audit plan in response to what you have obtained from the sample. Maybe you might even add other procedures, or you might not. Maybe there were simple procedures that you needed to do, then you can remove them and do more complicated audit procedures to get more evidence. Or maybe you can see that you are happy with everything, then it's unnecessary to do other procedures that you were intending to do. But remember, as we said, always your professional judgment will be playing a role. Right. So, and throughout, you should know that in your tolerable, your confidence level, tolerable misstatement, expected level of deviations will play a very important role in determining whether whatever you are getting there can be acceptable or not. Any questions there? Right, so these are the issues that we have to take into account when we're determining our samples. So I will come up with the questions that we also have to deal with when we are dealing with samples. And the other week, that is next week, we're going to have class on Thursday as usual, and we'll also have class during the weekend. So next week we'll have class on Thursday and we'll also have class weekend. I think I would remind you on Thursday. Thank you so much and God bless you richly.